You're watching TheStreet.com TV. On Wall Street Confidential, we're talking about refiners. Now, Jim Cramer, first, welcome to the program.
Thank you.
There's a lot of worrisome headlines out there regarding oil. We're hearing about heating oil costs going up this winter, meteorologists saying it's going to be a colder winter. Where are you looking right now in the oil sector?
First of all, that article in the Times really bothered me. 63% of America is heated by natural gas. Everyone knows that natural gas is just unbelievably low. Mm-hmm. You know, the idea that your heating bill is going to derail a consumer is just, frankly, you know, that's just sloppy. That's like someone who says, listen, I want a story on how oil prices are going to hurt the consumer. There's a lot of ways to high oil prices create inflation. Mm-hmm. But your issue when you're doing heating is natural gas.
Right, because they're saying like $800 to $900, which is
yeah,
like,
I mean,
natural gas is
down. Natural gas is down, and you know, I don't know where they get these figures. You look at the natural gas price right now, $5, but it's actually lower than that, particularly for a lot of parts of the country because it's regional business. So the story should have been they may be hurting at the pump, but they're not getting hurt at home. Mm-hmm. But then that story too would be wrong because the pump prices, as we saw from ConocoPhillips, which I own for ActionAlertsPlus.com, Chevron and Valero, are not keeping pace with the price of oil, and that's because there had been very big margins for the refiners. They jacked up the price. Mm-hmm. They haven't been able to jack up the price. They're buying oil expensively, and they're not passing it on to the consumer. Why they're not is not clear to me, but that's one of the things that, you know, they can't seem to raise price so dramatically to the gas stations. But that, true, is not a problem. So, you know, we have these false problems, and a false problem is the price at the pump and your heating. And I really reject those. Now, as far as the individual stocks go, there's a guy named Dicker, by the way, who writes for RealMoney.com. It's a very interesting. I'm having a debate with him. I think he's quite wrong. I felt that the refining margins would matter. He didn't, but he will be right in the future because the refining margins are starting to widen. Could that eventually affect the price of gasoline? Yes, but I'm more concerned with stocks than I am with gasoline. And the reaction to Chevron coming down, now Chevron's down $3 from when it announced that giant buyback. I would be buyer of Chevron. Conoco off $1 on this news, which was, remember, Conoco already pre-announced refining margins, so that doesn't make any sense. Valero, Dicker likes, you know, frankly, Valero near 52-week high. I don't see any value in it versus owning a Chevron or owning a ConocoPhillips. I'd rather own those, and those have better buybacks right now. Valero's always had a good buyback, but I think those have a better growth story.
So refining margins, at what point do you see this becoming more of an issue in terms of...
No, the refining margin, that was in the
past.
Less of an issue now.
Okay.
I mean, the refining margins have started to expand.
Can it reemerge as an issue, do you think?
For the consumer or for the companies?
Well, for the companies, and then, you know...
No, for the companies, it's going the right way now. That's why Dicker's going to be right. This quarter is going to be better refining margins. So if you take your numbers down using the refining margins of Q3, you're going to be wrong. And that's one of the reasons I would not be recommending Chevron if I felt that the margins are going to get worse. They're actually going to get better. As far as what's going to go to the consumer, I don't know. I mean, I expect that we'll go back to $3 gasoline. It hasn't mattered. There's a series of canards, things that we keep hearing are going to drive the consumer out of their mind.
How is it that oil?
Well, that's the reason why the consumer is not that affected is because oil's still very cheap as a percentage of where on an inflation basis, because the stock market's going up, which is a tremendous boon to the consumer because they're all fully invested. And unless you bought a house in 2003, 4, 5, 6, you're not really feeling any pain, or you're trying to sell your house, which is a small percentage. Employment's good, and interest rates are going lower. So the bearish case against the consumer is less bearish than it was 3 months ago.
Okay, thanks a lot, Jim Cramer. On Wall Street Confidential, you're watching TheStreet.com TV. Stay tuned.